The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, this is Billy Ray Valentine, 100 South Broad Street, Philadelphia, Pennsylvania, also known as Larry Pesavento, and we're going to talk about the markets today. But before we do that, I have to share a story, folks. We got a really neat email from one of our friends over in Hong Kong, and he has done so well that, oh, wait a minute, I'll get this up here, so I'm going to post this boat here so that you'll be able to see what I'm talking about here. He's made so much that he's able to take his family on a cruise through the South Seas in his new boat. I'm sorry, folks, I posted the chart of Tom O'Brien's boat. God dog it. Just a minute. Let me get the one up for the guy that made the money trading. Just give it that a sec. You'll be able to see it because it was posted this morning. I wanted to let you know to see it here. There it is. It's the one behind Tom's boat. It's this one right here. This was the old site. This is a Hong Kong yacht harbor, folks. This is a multi-million-dollar yacht, but this is this used to be flooded with these boats. I think they were called saipans, if I'm not mistaken, something like that. Anyway, that's what they used to look like, but they're not like that anymore. Okay, let's talk about the markets. We've got a lot to cover. Our guest this week, we will have Peter Elides, Steve Huge, and it's not Steve Huge, Jeff Huge, Tim Bost, and J.C. Parrots of U.S. charts, what's it called? All-Star charts. He'll be on. All right, first of all, I want to talk about what the market has been doing. We've had a heck of a run. I said from the very beginning is to watch these markets because we're going to have some really big swings. And as you'll see today, we'll get this up here to let you see it. This is what's happened with the ABCDs that I've been looking at. You'll be able to see these are the ones we have. We just had the third one finish up here just now at 40.85. No matter where the market goes, folks, it's extremely bearish. All the market's doing is just, relieving some of the pain of the day yesterday. That's all it's really doing. Nothing more, nothing less. We've had some big swings. Early morning swings were really quite nice, as you can see. But what we're trying to do is this is so bearish that what we're looking at here, folks, that I have to be really careful. Believe me, I do. And I was looking at buying down there this morning, and I said, well, I'll wait to see if I can get a short off up here at this 48.60 level. So that's what I was waiting to see. But I wanted to share a couple of things from the past. Okay, now this to me is very important because it was very important in the life of me and also Tom Hugard, because Tom had just become a private trader. You'll notice here, this was August the 15th of 1987, folks. That's where I started the show here. I did my first show, I believe, out of Las Vegas. And at that day, on this day right here, on August 15th, the NASDAQ was up on the day with the Dow down 350 points. I remember it quite vividly. Towards the end of the day, the Dow rallied back. We went up and made the high on October 7th, and then we came down. The reason why I'm showing this is exactly the same pattern that we're looking at right now. I believe where we are is right here. That's where I believe we are. So whether that's right or not, we had the big move down. So this is part of that. Now, what we want to do now is to see if we get a 382 retracement. That's the $64 question. But anyway, in 2007, the market topped in October. We came down. We had this area. Now, once the market broke right here, this spot right here, folks, that's when Tom Hugard and I became extremely bearish. And I had to trade all night long. And the reason why is because we had overnight trading and these markets were really crazy. So I was trading overnight And the only way I could stay awake was to play video, online poker. You buy in a tournament for $10, and the reason why is if I dozed off, if my time to betting was up, the alarm would go off and it would wake me up. It was only about 4 or 5 weeks, but we had one heck of a run on the downside. So we've had a gap, as you'll see in some of these things, and that's very, very negative. Plus that 382 rally, very, very negative. But we'll be right back. 877-927-6648.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I wanted to bring the natural gas contract up to show you the type of moves that we're having here. If you notice the top that we made there, we had the pullback. We had the 382 last night. That was in around midnight, I believe, our time. And I sent a video out saying that this would probably be a good short at that level because it was acting like it only might make the 382, and it did hit the 382. And folks, that move down was $5,000, and the move up was $7,000. Now that's moved $12,000 today. That's just showing you some of the volatility that's going on in the natural gas. So when you look at these numbers, I mean, you got to remember that there's a lot of algorithmic traders out there that are using this kind of stuff. So when they don't work, that's what you've got to be really, really worried about. That's the main thing that we want to be talking about, okay? Very, very important. I wanted to share one other thing with you that is quite interesting. Hold on one second, and I'll be able to get this up here. Someone asked me what I thought the price objective would be on this move that we're having right now, if I am in fact bearish and it does work. All I'm going to do now, I'm going to switch to a monthly chart because that to me shows it the best of anything that I can find. And I'll get this up here. Now this will all change if we get above 4160 in the S&P, then this is not working. Okay, so here's where we are. This is where we sold it the first time. The second time was Friday. That's when we had the big, 50% retracement. We sent that out saying to sell at that level of 42.20. And from there, we broke down, quite a bit. But if we get above 4170, then they're 4170, 4180, something's wrong. But the price objective on this would be the 382, or the 61% retracement of the COVID low. That's back to those old highs. And as you can see from that chart, that comes in at around 310. So that would be down another 100 handles or so in the S&P, taking it down to around 39 and change. That's the way, I'm looking at that from a longer term perspective. But, we got in this thing, it's working okay. And, we're watching the smaller swings as we go. But those are the main things that we're watching here today. I wanted to show you the German DAX, because if you think these things are just related to us, you'll be able to see this is one from old Tommy Terrific himself. And I believe that Tom's going to be able to join me on, it happens to be his birthday, on September the 20th when I do the full day trading thing here. I'm working on getting Tom as my guest trader that day and spending an hour or so with us doing some trading along with some other good things that we have planned for you related to cryptocurrencies. I don't know whether cryptocurrencies are good, bad, or indifferent. I don't care. All I know that there's $1 trillion in there trading it, and I wanted to show you the chart that I'm looking at here because, folks, this is a flat-out bearish chart. I don't know where the bottom is here, but if you take a look at this, we had this big ABCD up here. This was a 3-drive to a top pattern at 68,000. That was a real easy one to look at. We come down. The ABCD measures to 12,000. We've had this. Look at this rally, folks. For 6 weeks, everybody's talking about the big rally in the cryptos. Are you kidding me? What planet are they on, for God's sake? That's not even a 382 rally. Well, it's a 382 off of the second rally right here. But this is a nothing rally. So to me, this thing's getting ready to go lower. That's the bottom line of what I'm watching here. So we'll see whether that means a whole lot or not. But that's the way the game is played. So let's remind ourselves of that. It's not how much money you make. It's how much money you don't lose. I hear the people on Bloomberg talking today about how bullish it is. The fact that the market didn't collapse. It couldn't even get back to to even yesterday, folks. Hello, operator. Where's the world? Sorry to be crazy. Now, we also mentioned that there was a possibility, a strong possibility, that the only market that was going to be really strong, well, wheat's up, but and corn's up slightly, but the only market we thought might be really strong was the crude oil market, and that market has just been absolutely smoking today. I have a chart on it, but whether I can find it or not, guess what? I can't, so I'll switch to door number 2. And door number 2 happens to be the one for wheat. And this was the other one that had a potential for really strong strength. The reason why, bring this up here so we can take a look at it. You'll never guess. We had that big bottom down there. Remember Mr. Z was telling us all about that beautiful bottom that was there? There it was right there, folks, right on a 382. Today, the bottom was 786, and it moved 50 cents to the upside. So that was a huge move. So we thank Mr. Z for that. We also have some great charts from Mr. Z that I hope I can find because I put them in here, and I will have them ready by the break because he really, really outlined what he's looking at here in stocks, falling along with the same patterns that we look at. But he did a great job showing the similarities between 2008 and where we are right now. And I want to show you those when the break comes up. But now we have to take a trip across the pond, and we have to talk about the British pound. I want to get this up here. This happens to be the German DAX. Let's get the idea ready here. Hold on one second here. This is the DAX. That's what I want to show you. Now, there's what's happened here. Now, this is the daily. You can see here the three drive. This is the 135 pattern. Drive 1, drive 3, drive 5. 1, 3, 5. 5 being this level right here. Okay. Now, look. See, we're going to measure way down here. So that's where this is a daily. So we think we're going to be breaking down into this area. That's why I mentioned Friday, don't be long this stuff over the weekend. I imagine if you woke up and saw that, the Dow was down 300 and the S&P was down 50, you were a little unhappy. But, the fact you got back 45 points in the Dow Jones is a pretty good thing to look at. But if the open interest increases on a day like today, be really super careful. You have to be careful anyway because of that island reversal that's up there. That's the thing that has been the most amazing thing to me, that it's been able to move up to that level. Now, I have a great quote here that I wanted to share with you from someone who was very, very special in my life. And if you want to know about trading, this is really something very good. One of Mark's favorites quote. It's in the first part of his book here. And I think you'll be interested to go through it because this is what it's all about with trading, folks. It says here that if you do this, you're going to be in pretty good shape. And that says, when you really believe that trading is simply a probability game, concept like right or wrong, win or lose, no longer have the same significance. Boys and girls, remember, this is a probability game. You can have the greatest win streaks in the world, and you can turn around and have one of the worst losing streaks in the world. I can attest to that because I've been through both of them. So you've got to think in terms of the fact that this is all related to probability, and that's all it really is. The ones you think are the best, those are the ones that probably give you the most trouble. So you got to remind ourselves. We're going to take a little break here. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I've got some charts here that came from Mr. Z, John Chaney, here at TFNN. He made a really great comparison between 2007, 2008, and to where we are now. So I'm going to go through these sequence of charts for you. You'll see that you've got these dates that are here, how many days it went down into the move. And all I'm going to do now is I'm going to get back to where I was, and I'm going to show you these one at a time, because what you're doing is you're seeing a market that is doing exactly, I mean, within 4 days of the same thing that it did in 2008. 2007, 2008, that area. So you can see here we're down 160 days on one, 164 days on another. That's pretty close. I mean, you got to give it credit for that. Now we're going to go through and look at some of the other things that happened here. Now this is what we're looking at. Now that we don't know when that bottom is coming, if it is coming, but what we want to do is we want to take and look at this, because markets do repeat and they do have a memory. But you'll see here on the rally up, how many days did it go? Whoops, hallelujah. There it was. So about 63 days up. So what we're going to do now is we're going to go to the next one, and we're going to see what this one did. And this is where we are right now. We'll get this one here in the line here. You'll see this one will be, this is really incredible research, folks. I hope you appreciate. Hell, it might not work, but by golly, it's working so far. Anyway, there's where we were so far. This ABCD pattern we had here, that completed this morning, I think right around that 4,000 level. Even, and now we're trying to get that 382 rallies today as we go. We might not make it today, it might be tomorrow, but watch for a 382 rally on that, because I think it's very, very important. Now we've got 2 more here that I wanted to show you, and this is the overall summary of what John was looking at as far as how close this thing is running to where it was in 2007 and 2008, and you'll see here that it's a really high correlation. So let's pay really close attention to this, because he does incredible work, and it's doing what we thought it would do. You know, so I mean, to have a move where the market goes down 1,300 Dow points with the Fed speaking. I mean, hello, operator, you think the Fed didn't know this? Get out of here. That's what started the whole thing, is my guess. Okay, now I showed you that chart of wheat, okay? Now, I started the show today talking to you about crude oil, because one of the things we sent in our video of crude oil, it had a tremendously bullish bias if it didn't go lower, and I wanted to show you what I was referring to. I did this in the video, but look at this. We right there's your 382 retracement, folks. Today, I mean, this overnight, and it couldn't get any lower than that. Look at it; it rallies, $4 a barrel. We for sure know that this bottom down here at 87 has been a bottom now. So now we're almost 10% higher in just a very, very short period of time. So I hope that makes some important information for you, because to me, I think it tells you where that crude oil is. We're almost making the ABCD now. If you get up there, which will be, we're already above the 1.618 up in here. So, you've got to give it a little bit of room, but you have to measure that ABCD, because we're getting close up here where, if you like ABCD, this is where you have to be a seller. Let's just measure that. Since we're on the air right now, let's just do that right now and see, maybe we can get a trade off here Uh-oh, something's wrong. Oh, I know what the problem is. I don't have the active chart up. So I've got to move on to point number 2, and that gives me 1 second over here to talk about this. And I wanted to share with you from the McClellan folks, and I want to show you they have a this is the son of the, what is his name? I can't remember his son's name. Doggone it. Hold on 1 second here. And let me get this up here to show you this chart. Okay, here we go. All right, this is from Macmillan Publications, and they're talking about this little tiny fishhook pattern. We call that the 382. But you'll notice here, it's having the same pattern here, which is a very, very bearish pattern in gold. Now, we sold that up there at 1772 the other day. It got down to 1733 today, rallied about 20 bucks, trading around 1750. We still think we're heading down below 1700 in this move for a lot of different reasons. The weakness in silver, platinum, and these others are also in there. And also the GDX has been tremendous, under a great deal of pressure also. So that's another one that is very, very important. Let me see if I can get up here. I am in the host chat. I think I am. Aha. All right. Okay, now let's move. If you have any questions, folks, 877-927-6648. But I just wanted to bring one other one up to you, the importance of the chart that Jeff Hughes gave us. And this was before the big move down. Actually, it was the big move down. He sent this out on Sunday, and I wanted to show you that with that move that we had right up to the 382 in the NASDAQ and in the Dow Jones were 382s. The 50% retracements were Russell and the S&P. But look what happened. We reversed and took out those lows. Folks, I don't know if this is going to work or not, but this is really a bearish pattern. It just is flat out bearish. I mean, I don't, if the market can do anything it wants, and it usually does exactly what you might think it's not going to, but this is really a pretty good, Yes, Jeff Hughes will be my guest on the Tom O'Brien show that I'll be doing at 3 o'clock today. I'm setting in for Tom, and I hope he doesn't get mad because I was joking about the boats. I don't like boats, but we did get that picture. Actually, that is one of our subscribers and friends over that white boat is his. It's a $2 million cruising. That thing is incredible. It's really amazing, but it could be free, and I wouldn't take it. I don't like boats. I don't even like planes that much, but boats, not so much. Okay, at least with the boat, if you get sick, you can fall out and get old. Well, you could fall out on a plane too. But anyway, I just don't like boats or ships. I don't like ships. A ship is one that has a boat on it. Okay, now let's get on here to talk about that pattern because I think it's important, folks. It may or not be. It was Friday. We had a big break, down over 300 points this morning, and then the market stayed down almost all night and made a little 3 drive to a bottom pattern there. Not quite at the ABCD target, but we've had a pretty good rally today. We rallied 50 handles so far in the E-mini S&P, and we're right back up there again. So my guess is we should have some resistance at this 40-60 level. That's what my little mini crystal ball says, and it's very mini. Trust me on that one. But anyway, I would really be watching that one quite carefully because I don't, it may go up for 2 or 3 days before it goes back down again, but the overall pattern is really bearish. I mean, open interest-wise, it's very bearish, and just by the pattern itself. The low, we've actually rallied 50 handles, folks. Now, remember, we dropped, are you ready for this? 300 handles. The 382 on this is all the way up to 30, I believe it's 4080. Just give me a second to get this up here to tell you what it is, because I put it in before, and I want to put it in again because the 382 might be coming in here. That number it's way up there. I know that. Oh, it's not too bad. It's right at 4080, I believe. Come on. Set there like that. 4085. So we're only 30 handles away from a 382, boys and girls. So that's where it could go. And above that, going to have to leave the party. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and I wanted to post a chart of the S&P over the last few days. We made this big top up here. This was the 3-drive pattern that we were talking about. This is where we were making the 61% retracement. Okay, and then we have the huge move down. We have the rally up. This was like Monday, Tuesday. Here's Wednesday, Thursday, Friday. Boom, down really hard. The 382 comes up in here right in the 40.85 area. So it could easily get to that point. But folks, with this move down like this, that is really, really negative. The only way that this turned positive is if we get back up into here. Then this was a big ABCD to get along. But this ABCD comes very, very short. You know, it's about 50 handles. It's supposed to be 39.70, I believe. We only got to 40.06. So that, to me, hasn't been fulfilled yet. Now, that's the way I'm looking at it. Someone asked me the question, how do you stay short, you know, after the market, you know, it gives you, if the market gives you 1,500, say 1,500 points, okay, in the Dow. Now it's rallied 300. Okay, now you've given back, 1/5 of what you had in. Now, if you're playing for something big, you got to sit there and not watch the machine, folks. That's the main thing. It's the most dangerous darn thing you can do. I remember the 2 times that I met Amos Hofstetter, both times. And remember, we didn't have all this fancy price stuff coming in. All we had was a Reuters machine and a ticker tape. and his secretary had the ticker tape, and she was doing 5-minute charts on pork bellies, and that's what he used, to keep his mind active so that he didn't have to watch the positions that he was in. And he was in some monster positions too. I mean, when he put something on, he was putting on millions of dollars because the whole world was following him. He was originally a broker at Hayden Stone, and then when Helmut Wiemeyer wanted to put Commodity Corporation together, and they got a guy named, what was his name, Peter Drucker, and he got one of the Nobel Prize guys, and they did pretty good. But anyway, he knew exactly what he was doing. He kept his mind on the prize, and he had a little plaque that was on his desk there, because he didn't have a computer. That was 1970. It was 1974. But anyway, he had a little plaque on the board that says, if you want to get out of position, you have to ask 2 questions. 1, has the position reached its objective? And number 2 is, has anything happened that would change your mind about where your objective is? And if you could answer yes to both of those questions, then you could exit the position because you didn't know where you were. And that's the whole key to what we're looking at. I have a painting behind me here on the wall above the fireplace that says, number 1 is, when in doubt, get out. And that is really one of the things that you want to remember. Well, the first one, of course, is never add to a losing position. Never, never, never. Don't do that. But number 2 is, when in doubt, just get out and wait for the pattern to complete, and you'll be far better off than what we're looking at. Now, many years ago, well, not many years ago, let's say many months ago, I posted some things from the Elliott Wave folks, and I wanted to bring some of them to your attention because he's been pretty right on this top. And I think I don't follow the letter. I don't get the letter. I get some of the charts from him because they're interesting to me. But these are some of the ones that we were watching from January. And at that time, we were making this monster top up in here. Of course, the top was January 4th. That's when we had the 3 drive to a top pattern. But there were other things that they were looking at that I never look at, and I wanted to share them again with you because we've seen them before. This one, and they're important now because it helps, solidify whether the fact this market is really bullish, or this is a great buying opportunity, which we'll see. Anyway, you can see what happened with how insider trading was going. Okay, that was also a negative because that was at an all-time record. The next one we want to take a look at here is the record volume on the NASDAQ and the S&P. Look at this up here. See, this means there's a lot of players in there, and that's exactly, what we've been seeing. Look what this thing went up here. I mean, hello, operator. Now things have calmed down a little bit because these stocks, some of them are down 70, 80, 90%, Peloton and a few of the others, and that tells you that somebody got hurt pretty bad on these things. Here's something that I don't understand. I don't know anything about it, and that is penny stocks. But you'll see here there was a huge amount of volume going on in the penny stocks. Well, I can tell you right now, Goldman Sachs and Chase, Manhattan Bank, and J.P. Morgan are not involved in penny stocks. That's the small speculator. You can see that record volume. You know what's going to happen there because what goes up must come down. It might not come down in your lifetime, but that's how it happens. Okay, let's get the other one here that I think is important, and this is call buying and stuff. This is all turned down now, but this is during the high months. You see, all the things are there to tell you this could be a longer-term correction than we're possibly looking at. So that's that one right there. Okay, now let's get one more, and then I'm done with this, and I want to get on to a couple other things that I think are pretty important. And this is one of the most important ones because it spans a long period of time and shows the importance of margin debt. Because with prices going up and interest rates going higher, your margin debt gets increasing. So that's another one that's very, very interesting in here. Okay, if you have any questions, 877-927-6648. And someone asked me, what did we come in with positions today? We came in with a position in, should we short the Dow Jones E-mini up there at 34 and change. That's been working pretty good. We short the gold from 1772, which was a 382 retracement. And we had one other one. The euro, we're still short the euro. It's up a little bit today, but, nothing dramatic. But, it's over 300 points down from where we thought it was going to be. So that's another one that looks very, very interesting. So also remember that. It's not how much money you make, it's how much money you don't lose, and that's the real thing. I wanted to show you the DAX 4-hour chart today, folks, because I was chatting with Tom Hugard this morning about this, and we had this big break to the downside. Actually, it was not as bad as I thought it was going to be because it held relatively well, just like we did. And then, of course, it's had a little bit of a bounce from that letter. But this is where the bearishness was really the worst here. That was a 382. You'll never guess what day that was, boys and girls. Everybody that thinks it was Friday, raise their hand. Oh, there's one person in the back of the room. Luigi Pepperoni raises his hand that he sees it was a 382, just like we were looking at the NASDAQ and the Dow Jones on Friday. So whether it's going or not, I need to check a couple of things because I've been talking for a long time. We got a break coming up. We get back from the break. I want to cover one currency besides the euro. That's the British pound, and we'll be doing that when we get back from the break. And if my good friends at TFNN will help me to install this Tiger clock that I hear so much about that I'm unable to put in the machine, it would certainly help my job here. So I guess there's no music coming up, but there's the music. We'll be right back, boys and girls.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, one of the questions we had from one of our listeners in the UK asked about the British pound. You can see here we had an ABCD here, but it was only a 30% correction from the high. We've been very bearish for this for a very long time. I'll show you why. We've come down now. We're having a little bit of a bounce. Very, very quiet. I mean, get ready to sell the 382 on this one, folks, because it's going to go a whole lot lower in our opinion. What we want to do now is we want to look at it on that longer term basis to show you why it looks that bearish. We'll get this up here. I've got too many lines on it, folks, but you'll be able to see what they are. You understand what these retracements mean, but this is what you want to look at. This is the weekly chart, and I've marked in the ABCD here. This is the ABCD. We're right here right now, so we expect a little bit of a rally and then another drop down to this level here around 111. Remember, you won't remember this, back in 85, this is when 1985, this is when the pound bottomed at 85. Byron Tucker was visiting me in California. It was January of 86, and we had a big New Year's Eve party there on the beach, and the pound was trading at around 86, and he said he thought it was going to go to 85, and from 85 it went to 150. So it was one heck of a move, but now we're getting lower and lower. Things in Europe are getting worse. They keep talking about the natural gas shortage and all the other stuff, and they're worried about wintertime, which they probably will. My guess is it's probably going to be one of the warmer winters we've had. God has a way of helping out people, but he also has a way of punishing other people, so who knows? Anyway, let's move on. That's the British pound. So I believe that we should sell the British pound on any 382 rally on that daily chart. That's up about 1.5 points from where we are right now, so pay close attention to that. We did hit the 4060 level in the S&P. That was my ABCD. If it gets above 4068, I would say sayonara to it and just take a 4-point loss. But to hang in there and keep your stop at, say, 4068 or something like that, not risk more than a few hundred. Hey, listen, live every day in an attitude of gratitude. May God bless, and may all your ships come in.